All right, hello and welcome, traders. It is Monday, February 12th, 2024. Great day in the market of nothingness. So absolutely nothing happened in the market today, but some stuff happened in our accounts. We'll get into that as well. And let's start off taking a look at the markets themselves before we jump in. This is the last day before I head to Florida for a couple days of R&R. Here's been a good month. Might as well go take some time and enjoy it. I still have some cool stuff to post for you guys, especially on the wheel strategy this week. So keep a lookout for that. We'll have something unique for you. But first, let's jump into the markets and take a look at what we have been seeing. I'm going to get my picture off here so you guys can see everything. All right, so let's jump in. Here we go, and we'll take a look at SPY here today. The SPX was down just a little bit over 4 points on the session, pretty much just unchanged on the day. It did run up a bit after the open in the morning, and then just kind of gave it all back, finishing slightly lower on the session. If we're taking a look at the weekly here, obviously one bar doesn't make a week, but for sure on the RSI, we are definitely in overbought territory. This squeeze is way longer than normal. Usually about 8 bars is the maximum. So is the average, I should say, not the maximum. But yeah, usually the average is around 8 bars before we start to tip over, and we're closer to about 10 bars here. So we're just extremely overdone, in my opinion, to the upside. We're well over the 3 ATR. I think this thing is ready to begin some sort of at least a little bit of a pullback here. Hopefully, we'll see that in the next couple of days. If we're looking at the daily chart, a little bit of a tip over here. Not really a strong MACD anyway. So MACD just barely moving higher. So nothing convincing there. And you can see RSI just slowly inching its way higher, even though the market's running solidly higher. So we're not getting a huge divergence, but we are not hitting new all-time highs in the RSI like we are in the market. So to me, that signals, again, running out of some steam on SPY. We take a look at the Qs. Pretty much the exact same thing. We are over the 3 ATR on the weekly. We're deep into a positive squeeze, overdone. We're in overbought territory and now maybe breaking down below. And I've at the 75. So normally the 70 for many people is the overbought, and I'm at the 75. So this is definitely an overbought area here. Didn't quite get there on the daily, but on the daily here, same type of a thing. You're not seeing RSI hitting new highs with the new highs here, which means, again, I think some divergence in the force is happening, and maybe we're just running out of steam a bit here. I think this is what we keep an eye on. Will we pull back around this trend line at 21, and then can we move higher from there? Very possibly, but I think a pullback is coming at some point. When that happens, who knows, but we're ready either way. All right, taking a look at IWM. Now, I alerted all of our members in the Discord on this yesterday that I thought this thing was ready to pop and rock here. And you've got on the weekly IWM, RSI has been moving higher, MACD moving higher, the squeeze has been moving higher, breaking out of this range that we've been in. I think this range could potentially run us up to 240 or so on IWM. So that is where of my target, and I'm not saying it's going there tomorrow, but that's my target on IWM is 240. So I'm very bullish here, and I think we've got to get some bullish trades on RTY or IWM. Taking a look at the daily here, this thing's been in a long squeeze, breaking out today. I think we're ready to rock and roll on IWM. If the markets even start to pull back on the big name techs, I think the beneficiary is going to be the small cap names. I think if the Fed starts to hint or look at cuts, I think small caps are going to benefit even more than the larger caps are. They're a lot more dependent on interest rates as a whole, and you're really seeing that this thing's marching up as the rates have been falling, and then as the rates started rebounding, we tailed off, and now we're back on it again. So it came down, bounced off the 50, back up and running. I like where we are here. We're going to talk about some trades maybe in this today. Let's keep rolling. Taking a look at a number of stocks above their 50-day moving average, still right down here in the 60% range, 66%. still tipping over. We've seen it where maybe it holds a bit and it can bounce, and then eventually it gives up when it gets to these levels up in here around 90. So that's what I'm looking for, is these levels here uh, to signal potentially moving down lower in the market. So let's see what happens here. Do we get more of a sell-off and start to bring this thing back down to reality somewhere down here? Let's extend this line out, by the way. All right, so we just want to keep these lines moving. And this is not the all-time highs. I just moved this down. In fact, let's go back and fix that a bit. The all-time high was 98 on these. So we're under that, the all-time high, but really you're boxed in these ranges. So I think when we take a look at this, I think the trend line that you want to watch is really this 90 range in here. I think that's what we want to keep an eye on, is this first one. But either way, we bounced on and we've been heading lower. So this to me is a bit of a bearish sign heading lower, but maybe we're bouncing. Who knows what's going on? Put call ratio continues to drop. If we look at the charts here, and we want to take a look at the put call, as this thing is falling, the markets are rising. Maybe this time we're going to get this thing down under the 7.7, and then maybe we'll start to move back up. When we start to move back up, markets start to fall. So we're not there yet. We didn't really get to any kind of an oversold reading here. This little bounce up just moved us sideways for a while, and then we started tailing back down. If we see the put call ratio continue to just stay below 0.7 here on the put call ratio, the longer it stays down below 0.7, maybe even 0.6, this is going to keep dragging this line down. And then once we start to see it start to pop up again, as we start to see these things popping up, I think that's going to signal a little bit for the market to begin to sell off as well. So I think that's something to keep an eye on. Let's take a look at the VIX. VIX had a nice little pop today. So the markets did nothing on the day, but the VIX did pop, and that did cause a little bit of negativity out there. So the naked puts that we have and the short puts of the PDS of our 112s, they didn't like the market today. Even though the market did nothing, volatility did increase fractionally here. Now, yes, it was an 8% increase. So, excuse me, a big gap move here during the squeeze to the downside. So it's really been kind of dead, but now you're starting to maybe get some rotation. Maybe we're going to get a little bit of excitement going with some volatility. Also, again, another little bit of a bearish sign. So you've got stocks overbought, number one. You've got the put call ratio falling, number two. So if it gets too oversold, that's going to be bearish. And then you've got the stocks over their 50-day moving average falling, all bearish signs. So everything right now bearishly stacked. US dollar really did a whole lot of nothing today. We'll just extend this thing out. So you can see we've got a couple good hits on it here, and we're right on this line. I think that's the best way to draw it right now. After we broke out of this ascending triangle, maybe we'll come back, tap this line. Maybe the dollar keeps climbing, maybe not. Weekly looks fairly bullish. So the weekly looks bullish. The daily looks a bit bearish. So I think we just keep trending sideways a bit on the dollar, which means rates are going to keep trending sideways, in my opinion, as well for a little bit. So I don't really want to do anything here except strangle the heck out of bonds, in my opinion. So we're going to keep strangling bonds. Let's take a look at some of the futures. We'll look at the Fab Four, as I call them, which is first oil. Weekly looks pretty solid, continues to break. Now it's back up above the 21 EMA, and the 9's rising quickly to meet that. Everything is starting to congeal right around this area in here. And if we look at the daily, Now we're starting to, really start to get this pop moving. If we can break above the 200 here, I think oil could get rocking and rolling. We're close to triggering a PSAR bullish signal. You got the 9 rising above the 21 trying to break the 50 today. MACD rising, RSI rising, squeeze, getting, a little bit of momentum going last 3 days, tailed off today, and you're in a uptrend according to the trend lines here. So as we work this, we might start to see a little bit of a ascending wedge or ascending triangle, giving us a little bit more to the upside. So I like it, even though oil on this session today just gave us a little bit of a pop, but not a whole lot of anything today on oil. Looking at gold, so I like oil and I like strangling it. It's right now, oil's our second largest holding in the entire portfolio, oil futures. Where are we on gold? Well, gold's just been in this downtrend now since the beginning of the year. So it's really, been in this wedge pattern, uptrend overall, but downtrend for the year. And now maybe starting to break below this triangle pattern that we're in with a weak looking weekly and a fairly weak looking daily chart. So a little bearish on gold here, and I'm fine with strangles, but because I don't really think gold's going to accelerate significantly to the downside, but it is definitely in a bit of a bearish mode now. So I am turning a little bit more bearish, even though we've been above all of our moving averages. We're starting to now break down below the 9, heading to the 21 on the weekly. We've broken the major moving averages now on the daily. All of them except for the 200 now have been broken. So right now, gold in a squeeze, breaking to the downside. We could definitely see some more downside on gold. That will bode well for our put debit spreads that we have remaining. And that's also going to bode well for our 112 trades and our 2112 trade that we have on. The calls in that alone are up 63%, but the puts are even up 50%. So overall, it's looking pretty good. All right, if we take a look at copper today, how's copper doing trading in this tight channel? Had a big selling last 2 weeks and then bouncing a bit today. So you can see how we bounced today, kind of in no man's land. Let's see if this little previous support area, is this going to flip to resistance? If it does, maybe we'll see copper fail. But I still think copper is fine here. The weekly looks bearish a bit. The daily looks kind of mixed here. Even after this downtrend, it still doesn't look terrible. So I like copper as a strangle opportunity here. And then finally, bonds. We talked about rates when we were talking about rates on the session overall, just moving sideways and not doing a whole lot of anything. I don't know that rates are going to continue massive upside, but I think they'll still drift to the upside, which means bonds could be drifting to the downside a bit. Overall, you are in a bearish mode on bonds. Weeklies all heading lower, starting to accelerate that move down the last couple of weeks. And we're breaking out of this wedge pattern that we had. It's a pretty flimsy uptrend line. So we'll probably just remove that. And we're just going to stay in this downtrend line right now. I'll draw it out just along the tops of these. And right now it's weak, heading lower. So, I think you get bonds heading lower, but I don't think significantly lower. So I think rates heading fractionally higher on the 10 and 30, with bonds heading fractionally lower. But I don't expect any really big moves unless something significant happens. I think strangle opportunities. You got strangle opportunities, in my opinion, on bonds. I think strangle opportunities here on copper are possible. I think strangle opportunities on gold, very, very possible. And I think strangle opportunities on oil, but probably leaning more towards a 112 type structure, because I think there's more upside risk in oil than there is the downside. So that's how we're playing it. We'll keep those big four rolling and moving. Not really going to get too deep into sectors today. Most everything was up decently, led by biotechs, and the regional banks and retailers. And then on the bottom here was all the tech. So you've got tech stocks dropping a bit today, even though they're hitting new all-time highs on the session. We finished off our highs. Semiconductors are just so volatile, they're moving up and down. Real estate just fractionally off, moving sideways. And then your consumer discretionary here, your Amazons and Teslas, still looks pretty doggone good, even though not a great day in the market. And then your big names, you had Apple dropping on the session today as it continues to look somewhat weak on the weekly and the daily. You have Microsoft that looks like it's starting to weaken on the daily and maybe even on the weekly as it's overbought. So I think you can see some pullbacks there. Got Amazon getting a bit overextended. I think this thing could tip over on the weekly. You got Meta overextended, I think pretty big time on both the weekly and the daily. I think you've got Google, which looks the best of all of them. I think after this pullback, I think Google still is in a nice position to potentially move higher. And then you've got NVIDIA heading into earnings. I can't even keep up with how fast this thing is going to the upside. You're now touching 750 almost on the session today. Just an out of control stock. If you're in it and you own it, great. You look how long this since January of this, since the beginning of the year, for over a month, this thing has been overbought and not really even cracking down through, and overbought here as well on the weekly. In fact, we had one area here, which technically from around March of last year all the way till through the end of July last year. So March, April, May, June, and July, 5 straight months here of being overbought. And then it just got parabolic this year. So this has been on an incredible tear. It's so overbought that it's not even funny heading into earnings, which I don't even know how earnings could possibly support this stock run without some kind of a pullback, but I'm not going against NVIDIA at all. I'm just staying away. And then Tesla, we did point this out that I think it was a good opportunity to start to look at, this thing basing out down in here, the weekly starting to maybe turn and bottom a bit here. The daily really starting to bottom and base out a bit here. So I think Tesla, not a terrible play in here. But if the whole market starts to sell off, is Tesla going to fight the trend? Netflix is on a tear. And then Costco, again, this thing just, it's a phenomenal stock. Costco is just awesome. But everything is just so overbought right now. Just so overbought. It's scary to me that I just think there's not a lot of places to really hide when it comes to some of these things. All right, so let's jump in. That's just my opinions on things. Let's see what happened on the session today. So last week we ended up the week up $5,399. That was the second largest week of the entire year after the first week of the year, which was awesome. So a really, really good year. We're up already this month. Last month was a record month, I believe, for us at 21,428, or pretty doggone close to it, up over 5% in realized gains and up over 7.6%. And we're already 1/3 of the way there in 12 days this month. So we're right on pace to keep this going. We're still negative delta, which is totally fine with me. It's pretty delta neutral anyway, so up or down doesn't really matter. I think I would prefer to be slightly negative delta. I don't think having a lot of positive deltas here is a smart place to be. I think neutral to slightly negative delta in an overbought situation here while you're a premium seller collecting theta, okay, is totally fine. Okay? We can be fairly delta neutral, collect a lot of theta, and watch our net lick continue to rise. So we're just off of our all-time highs on our net lick, but we're hanging in there pretty well. BP usage has been dropping a bit. We're down to 45%. I like it. Now I'm heading out of town for the next couple days. I'll loosely keep track of what I'm doing, but I love the way I trade, so I don't have to watch it all day long and be worried what's happening. I can pop it up on my phone, just get a sense of where the market is, and then just move about my day. I really don't have a whole lot of moves that I have to make. But we managed to knock out another $1,470 in realized gains today. Let's talk about those let's just talk about those now. So we did close a ratio spread in oil. So we had an oil ratio spread. We closed it early. I would normally want 50%. I took 35% in 17 days. I was hoping for 40% today, but because Tasty doesn't allow you to get out of a two-legged trade in one trade, I had to exit separately, and it caused me some slippage, which caused me a couple points of percentage. I can't wait until Tasty Trade eventually gives you the ability to put multi-legged trades on and off. It's really frustrating on that platform right now with the lack of ability to do multi-legged trades. I mean, to me, that's the number one drawback. Yeah, their charting is absolutely horrific. It's a nice, easy to use. I love the platform itself, but man, multi-legged trades, come on. Okay, get that done. Okay, you've done it before. Let's get it in toss. Let's get it done here. Okay, and then improve your charting a bit here and improve the analysis tab. My gosh, that is a complete and utter disaster to analyze positions and as a whole and complex positions. So if we can get that fixed, it'll be great. Other than that, I love the commissions and the trading platform, the ease of use. All right, and then the other one we closed today. So sorry about that little rant on Tasty. But I'm still using them, and I still recommend everybody else use it as well. All right, strangles. Here we did close a gold strangle out early as well. So 17 days in trade to get 43%. I mean, why wait, who knows how long for 7 more percent? I'm just taking the wins. So these two trades together is what we closed out for 1470. So a nice little chunk today. Pays for the vacation, or at least part of it, I should say. And if we look at how things are going overall for the year, we're up 7% on the year in realized. We're up 7.6% in net lick on the year. Here's how we're doing it right now for the month of February. We've got one long-term 112 that's come off to the good. 2,400. We've closed $1,290 with the oil strangles, $1,120 with the gold strangles in total. So strangle trades right now doing extremely well. We've got 112 trades in oil and other futures coming off to at least $1,500 there. We've got a BA 112. We've closed the naked puts on that. We've had ratio spreads come off for over almost $1,000 of ratio spreads, and then we're down still slightly on 0DTE. We haven't done much of anything. We took a loss and a win, and that's where we are sitting right now. And then hedges are always going to be an expense for us every month or so. All right, and then some spec trades to the good. Still have an overall nice 94% win rate overall, and we're doing well. We've only had 2 losing trades this month, and our goal's 12,468 on the month, which is our 3% goal. We're only $6,000 away, and I know we've got at least another 112, coming off. That'll put us another almost $2,400 to the good. So we just need to pick up $3,000 on some of the other trades, and we're going to nail it there. And then as far as our strategy builder goes, we're still sticking with about 60% of our total BP that we're allowed to use. 60% of that goes into our long-term 112s, about 15% into our 112s on ES futures, 10% on oil futures. We've got some strangle trades using about 10% of our buying power, and then down here some spec trades. I am doing some more ratio spreads. I'm just using the spec trade money to do those. So overall, I'm expecting, as an average this year, that we should be able to generate, at least based upon our current net lick, somewhere around 16 grand a month. In a perfect world, there is no such thing. It'll fluctuate up, it'll fluctuate down, but that's what our plan looks like. And right now we're on track. So we're doing fantastic this year, having a great year so far. Yep, the market's up, so we're not killing the market, but if the market starts to turn down, that's when we're really going to turn it up. So I'm excited to watch what happens there. All right, so I may or may not post tomorrow. See what I can get out. I'm definitely going to have a post on the wheel strategy coming out on Wednesday. So be sure to take a look for that. I'm going to talk about why I hate the wheel strategy, and then I'm going to tell you how I trade it. And then I've got another strategy that I think puts the wheel strategy a bit on steroids or so and makes it more effective. So I'm not a big fan of the straight wheel. I'm not a big fan of the wheel as a whole, at least not as a trading vehicle. But I think in some longer term and PM accounts, I think there's some value to it. I think in a Reg T account, I really hate it. I don't like it. I'll talk more about that. I'll give you my reasons. You guys can write the hate mail here back because everybody loves the wheel strategy and all these gurus making 10% a month out there and telling you should make 10% a month. I think that's absolute hogwash, and I think it's dangerous. And I think you need to be careful when you're watching, who you're listening to. If you're going to make 10% a month, if I was making 10% a month, okay, I wouldn't even be bothering with this. Okay, I'd show you guys how to do it, and then I would disappear forever. Okay, I'm more than happy to show you. It's not going to be a secret to me. Okay, I can't make 10% a month without a lot of risk. If they're telling you they're making 10% a month out there, you're taking on a boatload of risk. I'm only shooting for 3%, which to me feels like it's somewhat risky to begin with. But I feel confident that I can do it in a normal trading account. I'm not going to tell you to go out and make 10% and 20% a month and double your money every year. You can do that. I can do that, but you got to take extreme risk, in my opinions, and it's just not worth it. Okay, let's get rich slow and steady. Plow your investing money into your trading account and let it keep growing from there. So that's my opinion on that. I think you should be saving an absolute ton of your money. If you're not putting at least 10% in your company's 401k and maxing out your match and then some and just leaving it there, then I think you should be also putting another 10 to 15% in a trading account vehicle. Now, whether that's a Roth IRA or whether that's just a trading account or both, okay, take another 15% and do that. So you should be saving, in my opinion, at least 25% of your take-home pay, and that should be going into your investment accounts. Okay. The only time you should do that, though, is once you've got at least 6 months of salary saved up in a savings account and you've paid down your high interest credit cards and everything else, then I want you plowing 25% into your investments. Okay. If you need to pay down your house a bit, fine. Okay. You don't need to go crazy. Okay. My house got paid off in 12 years on a 30-year loan. And all I did was every single month for the first probably 10 years, all I did was pay my payment plus next month's principal. And next month's principal kept getting larger and larger and larger, but I was making more and more money and able to do that. And then by the time I hit year 10, I just started plowing even more money into it and paid it off in 12 years. Then I was able to take that money and just plow it into investment accounts and grow the investment accounts and the IRAs for the family and save all the kids' college tuition and so forth. So you get the point on it, but save, save, save. Okay, still go out and have some money. I'm heading out tomorrow. My wife and I are just heading to Florida. We're going to spend 5 days there, just hanging out and enjoying some things and eating and drinking our way around and just taking a little bit of a break. Why? Because we saved a ton early on and we stashed it. Okay, don't drive fancy cars. Don't have a whole lot of frills. My thing is I don't have fancy watches. Don't have fancy cars. Don't have a whole lot of fancy anything. What I do have is condos, vacations, and I love to travel. So that's where my money goes. But I just want to be able to have that freedom to be able to go when I want and where I want. So save your money, keep it rocking and rolling, keep it here. If you like what we're talking about here, click the like button. Let's see if we can get over 100 likes to 200 likes on this video. I know we're getting 1,200 to 2,000, 3,000 views here. We can certainly get ourselves to a couple hundred likes. So if you would help me out, do me a favor, hit the like button, subscribe if you're not a subscriber already, tell friends, family, how to jump on here so that we can help them as well put together at kind of a savings plan. And if you really want to see how the sausage is actually made, and you really want to see how, you know, the inner workings of what we're doing and how we're adjusting trades and how we're coming up with new trades, and you want to just be in a great mastermind group, join the Discord. Look below in the description. You'll find the discount code. Join us and see how that helps your trading. All right, everybody, take care. We'll see you later. Bye-bye.